I saw a New York Times headline this week that implied the market was slow because home sellers are unwilling to lower their prices. The implication was that if sellers drop prices, we'd have more home sales, but that's actually not true. We already have more buyers than sellers in this market. Home buyers are buying at these prices. This is a supply constrained market. Homeowners are simply unwilling to sell at all. And it's not that they're trying to sell, but we don't have buyers. We actually have more demand than supply at these prices. We know this from a few different metrics. We are currently at the fewest price reductions since last June, for example. Fewer sellers need to cut their prices each week because buyers are buying. The homes that are on the market now are not declining in price. Our immediate sales metric also confirms this. Of the 73,000 new listings this week, 25% of those are already in contract. Sellers lowering their prices does not help get more deals done in this environment. We have too much demand for the current supply. If you ask buyers, of course, that they'd like lower prices. We would have more buyers if prices or mortgage rates were lowered, but buyers are not the constraint that we have on this market right now. And we'll see how that plays out in all the stats this week. Every week, of course, Altos Research tracks every home for sale in the country. We analyze all the pricing, the supply and demand, the changes in that data, and we make it available to you before you see it in the traditional channels. The data we cover here in these videos is national in scope, and is available for every zip code in the U.S. Yeah, if you need to communicate with buyers and sellers about what's happening in this market right now, you should join us. There's a link in the description below to how to connect with us and dive in. I'm Mike Simonsen. I'm the founder of Altos Research. It's now the second quarter and the prime home buying and selling season, so let's look at the latest data. So when demand for homes is robust, fewer sellers need to cut their prices, and that's exactly what's happening right now. The percentage of listings with a price cut fell below 30% for the first time since last June. You can see the striking difference in the curve from last year to this year. By April last year, we could see price reductions were climbing quickly each week. Demand was weakening at that time. The light red line starting to curve up last year this time. By June, we'd crossed over 30% of the market with price cuts. This year, the dark red line ticked down rather unexpectedly this week. Each week, the market is recovering a bit from the ice cold end of late last year. You can see that quite clearly in this price reductions data. The price reductions metric really tells us two things right now. This is a leading indicator. Home sales prices that will close in the future are not under price pressure now. So while you'll hear headlines about falling home prices for several more months, these are sales that completed after the peak of price reductions a few months ago. You can see where the light red line peaked last fall. So contracts now, though, are not under that same pricing pressure as those sales that came before. So the second thing it tells us is that this market, for the moment, is in a warming trend. Despite, fears, internet chatter about coming recession, Americans, as of right now, are buying the homes that are available. This market is accelerating. It is not decelerating at the moment. By the way, we'll spend a lot more time with all the leading indicators in the Altos Research webinar this Thursday, April 13th at 10 a.m. Pacific. If you have an interest in what's actually happening in the market and how to communicate that with buyers and sellers, you should join us. There's a link in the description below. Click that to reserve your space. These are limited to 1,000 attendees each month, and we have very big demand for them. So click that link, register, and reserve your spot right away. I suspect that we're about to finally get some inventory. Inventory isn't climbing yet, but soon. This week, the available inventory of unsold single-family homes was essentially unchanged from last week at only 410,000. I'm noticing, though, in my neighborhood, a few listings finally starting to pop up for spring. So I anticipate that by next week, we'll see an uptick in available inventory. Most years, of course, inventory has been climbing for several weeks or months already. Last year, inventory bottomed in early March, though last year, this time we only had 261,000 homes on the market. It was climbing several percent each week. The gap between last year and this year is closing. If this trend continues, you can imagine that later in the year, we end up back in our old pattern of decreasing inventory each year. And wouldn't that be a surprise? In the webinar this Thursday, we will look at the latest inventory forecast data and see what the full year looks like. Available inventory is a function of fewer sellers, of course. That restricted inventory is fewer sellers. People who own with very low costs, even if they move, they might want to hold on to that first home. It's so cheap. So it's also, though, a function of plenty of buyers. So that supply-demand dynamic is what we see in this chart. This is the new listings each week and the immediate sales that happen. Each bar counts the total number of new sellers each week. The taller the bar, the more the sellers. It's striking to see how many fewer listings, new listings we have each week than in previous years. But the light portion of the bar are those new listings that went into contract immediately, essentially immediately after listing. And that portion of the bar is growing. So I don't want to overstate this. There's not a ton of buying demand, but there's enough. There were only 73,000 new listings this week. That's 18% fewer than last year. Each week we have roughly 20% fewer homes coming to market than last year. So supply remains very constrained. Of those, 25% went into contract within hours or just a few days. And this is dramatically fewer. So we have dramatically fewer sellers than last year, and dramatically fewer than what you'd want for a strong housing market. So 25% with immediate sales, though, is fewer than last year when demand was still at record highs. It would be a mistake, I think, to imply that we have a hot housing market. But like I've been saying, there are plenty of buyers for the available inventory, and that's keeping a floor on prices. The homes that are good quality and priced right are moving quickly. And that's a big change from last fall. So this is a market, this market is fewer sellers with plenty of buyers. And as I mentioned at the start of the video, the low transaction volume is not a function of price. Lower prices don't make more sales in this market. We're supply constrained. The median price of single-family homes in the U.S. right now is $439,900. That's up a tiny fraction from last week. The biggest thing we learned from the home price trends right now is that there is no downward pressure on prices. But the comparison from last year continues to get worse. Home prices are ticking up, but last year they were spiking up. And so relative to last year, each week is tighter. The price of the new listings each week is actually below last year at this time. So that's the light red line here at $405,000. The new listings are priced lower than last year and 6% lower than the peak at the end of May. The end of May is always when the new listings price peak. So we have 6 more weeks of these prices slowly ticking up. And it shows us how home prices will be flat to slightly down for the full year of 2023. And this is why we know that the sales prices, the headlines, they're going to keep reporting negative year-over-year price changes for several more months. So homes get listed now, they take offers in May, they close in June or July, and you start to hear those headlines in August. So we're going to keep hearing those headlines, and it's going to sound very bearish. But the actual real-time data is much more stable than those headlines will sound. So that is what you should expect in the coming months. The median price of the pendings is $375,000. That's unchanged from last week and 1.3% lower than last year at this time. This is a simple chart. The dark red line is the curve from this year. The light red line is the trend from last year. You can see that each week for the next few months, the comparison to last year is likely to keep getting worse. So these are the pendings, the homes that are in contract now. And what we know from the pendings price is that it's very close to the final sales price in aggregate. Any home may be over or underpriced, but in aggregate, it's very close. And so, for example, if you look at the Altos pendings price from back in February, it was about $364,000 range. When NAR reported the sales prices, NAR's reported sales prices for February, it came in at $363,000, pretty much exactly the same. So you can use this Altos pending number here as the earliest proxy for the sales prices of homes that will get reported out in the future. So we'll cover all this pricing data, lots of signals on the inventory, and dive into the local markets in this week's Altos Research webinar. If you have buyers and sellers that you need to help navigate the market right now, a lot of people are afraid. They're afraid the market is tanking, and they're afraid to act. So if your buyers and sellers have this fear, you really should join us because we'll dive into the data. We'll arm you with really good communication about what's actually happening. That's this Thursday, April 13th, 10 a.m. Pacific. There's a link to register for that in the description below. So click that, reserve your spot. These fill up fast. If you need to know what's happening in your local market right now, as it happens, go to altosresearch.com and book a free consult with our team. We will help you interpret the crazy market for your clients right now. This is a critical time to be informed. Okay, please join us. More next week.